For more on the markets, we cross to Nompumelelo Siziba. She's standing by at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. Markets breathing a sigh of relief as those US-China trade tensions ease.
That's right. Thanks very much, Nzinga. Yes, so now those US-China potential trade wars have been put on hold. But of course, that's just talk, you know. Tomorrow is another day and we could hear a different story. But for now, the market has seized this and everything is positive, so it seems. And we're seeing most bourses operating or trading in positive territory. And the all-share index is no exception. When I last checked, it was up. Last checked, it was up about 0.5%, and it's being spurred largely by the mining counters and financials. However, when we look at the precious metals like gold and platinum, they're not doing so well today. That is the underlying commodities. I'm not quite sure how the actual stocks themselves related to those commodities are doing, but I would suspect they're not doing so well because of how they're performing today. And the oil price, it does remain elevated, although it's a little bit away from that $80 a barrel that it reached last week. But of course, tomorrow's another day. It could easily reach that level, but it's good news for now. But of course, it does still mean that we're going to experience higher prices at the petrol pump. We're seeing the rand really on a major back foot. It's trading around 12.80 against the US dollar. And this is really a product of a firmer US currency. That currency is firm right across the board against major peers. And obviously, emerging markets like South Africa won't do well as a result. Let's take a look at the indicators. Well, I'm joined by Bright Kumalo. He's from Vestach. Thanks for joining us, sir.
Yeah, it's lovely to be here. No?
Good stuff. Last week was a very turbulent week on global markets, but things are looking rosy and sunny today. What's your take?
Yes, of course. It's that hold basically between the trade wars between China and the US, and this is after a conversation, obviously, with the leader of the Chinese country. What's interesting there is that basically Secretary Mnuchin came and said basically these trade wars are on hold while they renegotiate a much broader deal, which was, you know, it will put the US at a better position than previously as compared to the previous deal that they had before these trade sanctions, you want to call them. Yeah, so it's a very interesting place to be, and the market is cheering that.
Any concerns around, you know, there was supposed to be this summit between North Korea and the United States, but what's his name? I forget his name. That chap from the leader of North Korea. He's basically threatened not to go ahead with it. Any concerns bubbling there at all?
I don't know. I think it's more the people that stand to lose again is still North Korea. There isn't anyone doing trade with North Korea at this point. So the only person that stands to lose a lot there, it's him. So he needs to make a decision whether he wants to be part of the normal flows of the economy or he wants to still stay in North Korea by himself there.
Yeah, that's Mr. Kim Jong-un, yes. All right. And then dollar strength, that continues despite, you know, the dissipation in those trade tensions. The dollar continues to strengthen. And I suppose it's really about the fundamentals of that country. But what's your
trade wars, yeah.
And yeah. So what do you expect in terms of the impact on emerging markets?
So, I mean, we've seen already South Africa, we're talking about a 5-month low on the rand against the dollar. That's the same across all emerging market currencies. I mean, you look at Argentina, they're 25% weaker after that $8 billion sale of the currency reserves, which was in hindsight a bad move for them. And you look at Turkey, they've got their own political shenanigans going on there. I think they're the worst in terms of performance against the US dollar. You've got Ukraine, you've got Argentina, like I said, you've got many different countries there that are doing worse than South Africa. yeah, the Turkish lira not looking good at this point.
For us, something that is connected to how the rand performs is obviously how ratings agencies look at us.
Correct.
Come Friday, we're expecting S&P Global to make a call. Do you think that they're going to take us further down into junk, or they're likely to keep us unchanged?
Yeah, I absolutely have no idea right now where we're headed with that. But
how do our fundamentals look from where you see them right now?
I mean, you look at our currency reserve as a percentage of our debt repayments. We're sitting at 137%, above the sort of heuristic rule of thumb of 100%. So we're looking good as compared to, for example, like Turkey, which is sitting at 90%, which they're looking very weak. You look at many different things. I mean, the inflation where it's currently at in South Africa, we're looking good. We will see those inflation numbers on Wednesday coming out, and then our central bank on Thursday are coming out with a decision what they do with the rates. So it's going to be all lead out to that ratings review on Friday. So I think where the economy is right now and Ramaphosa and everything, it's looking good, even though that basically the rand against the dollar has given up all of those the Ramaphosa rally.
Ramaphosa gains.
Yes,
yeah.
yes. But I don't think that's a problem, because it's mostly been the dollar, because the South African economics look better right now than they did 6 months ago.
Let's take a look at a stock. Pioneer Foods, they came out with their 6-month results. That's for the 6 months ended March this year. Headline earnings up 30% at 317.1 cents a share, and gross profit up 12%. Their gross profit margins did even better, and their sales turnover was a mere 4% increase. But obviously, they must have had a good handle on their costs, hence why we're seeing such great profits. What do you think of those numbers and the underlying business?
Yes, so the business is coming off of a sort of a low base because we had a drought for about 2-3 years, and it hasn't been good for a commodities business like Pioneer Food Group. The essentials foods business is doing exceptionally well. That's the one that increases profits by 70%, so a big contributor to that. The groceries division, even though revenues also going in the right direction, I saw profits were down about 3%, so not really a big impact there. The offshore business, or the international business they call it, also showing very strong double digits growth, around 12-13%. Things are starting to come together for this business, and I guess the investors that have been patient throughout the slump are going to be rewarded dearly for it. We saw the dividend; they didn't change the dividend, so they're still keeping the dividend flat. They probably trying to bulk up the cash reserves and to pay down some of the debt.
Yeah. Is it something that you would invest in personally?
No, it's not something I would invest in, unfortunately.
All right. Okay. Thanks very much for your time, as always, Bright. That was Bright Khumalo. He's a portfolio manager at Vestact. After a short break, Nzinga with more business news for you.